Welcome back here on Citizen Business. Now, after a week of suspended loan issuance of mobile loans, KCB has retweaked its KCB M-Pesa platform. While speculation was rife that the bank had shut down the system, the bank insists mobile lending is the next frontier for banks. So what does this mean for the banking sector? Patrick Igunza has more.
Now, the country's biggest bank by asset base has confirmed that it is pricing all its loans in accordance with the new law that pegs interest charges at not more than 14%.
We were among the first banks to announce lower rates at 14.5%, and we are now at 14%. And actually, the industry has moved to 14%. I mean, it will be legal to have a product today on interest rates beyond 14%.
This includes KCB M-Pesa mobile-based loans, which have been repriced to 1.17% a month, plus a one-off transaction fee of 2.5%, translating to a total 3.6% charge. That platform, which has resumed after close to a week's break, has, since its launch 18 months ago, roped in 7 million customers who've conducted 12 billion shillings worth of transactions.
Overall, we can say 30,000 loan requests every single day, borrowing between 50 million to 100 million every day. I mean, at this rate, you can almost say that if you lend 100 million every day for 365 days, you can lend 36.5 billion.
And that's where the bank seems to see the future of the sector. KCB is investing about 1 billion shillings in upgrading its digital platform. The aim is to manage 600 mobile transactions a second by the first 3 months of next year.
So that gives you the ability to handle an additional 20 million customers in the mobile platform. In fact, our view is that we should be able to provide a loan for every M-Pesa customers available today.
Banks, we have no discretion. All credit facilities have been capped.
KCB and Equity banks are among the lenders who've cut their interest rates on mobile-based loans. Commercial Bank of Africa, whose M-Shwari product disbursed 40 billion shillings in loans last year, continues to hold its stance, saying the 7.5% facilitation fee on M-Shwari loans remains a clear indication of the uncertainty on the extent to which the low capping interest rates applies. The regulator hasn't quite been clear on the matter.
What is the CBR today? 10. Add 4, 14. That's the law. So I cannot answer it beyond that.
And on that, most banks have obliged, but on matters charges, fees and exact cost of borrowing, while many are disoriented. Patrick Igunza, Citizen Business Center.
And we've got the man at the helm of Commercial Bank of Africa, Group CEO Isaac Owondo. Thank you so much for making time to be on the Citizen Business Center. Of course, quite a lot of confusion for the last couple of weeks. Now, CBA says you've capped M-Shwari pricing at 7.5%, which is a facilitation fee. Just run us through what exactly that means.
I think to talk about M-Shwari, one needs to go back to the beginning. And M-Shwari was based on a considerable amount of research over a period of about 15 months, where we talked to the customers in terms of what were the issues which they faced when they were seeking financing from banks, especially at the bottom of the pyramid, and especially focusing on micro-lending. And the research basically told us that the biggest problem in the market was really one of access first. And 70% of the time, people wanted to be able to borrow, to be able to do certain business activities or meet certain commitments, but did not have the ability to be able to borrow. So they were the discretion of borrowing from all sorts of unregulated lenders. And out of that work, one of the things we found out was that there was a market for very, very short-term borrowing requirements, and we designed our product to focus on borrowing over a maximum period of 1 month. And we recognize the fact that if one is borrowing for 1 month or up to a maximum of 1 month, it is feasible that they will borrow for a day, they will borrow for a month, or they will borrow for a few hours. And I think based on some of the research which we undertook, it was clear that interest was not going to be the basis for pricing those kinds of facilities. And we went to the regulator with a request that the pricing be based on a facility fee, and that is the basis on which we have applied this product from the beginning. Now, I think that you need to look at it from the perspective that today we issue in excess of 70 to 80,000 loans every day. We receive in excess of 400,000 applications, and the users of these loans range from business. 40% of the time they are used for business, about 10% of the time for people in the agricultural supply chain. Consumptive use is about 20%, and so
what is the range? How much can they borrow?
They can borrow anywhere between 100 shillings and 50,000 shillings. Yes,
All right. So basically what you're saying is from when this product was launched in 2012?
2012 November.
2012 November. Nothing has changed despite the words going around in the grapevine for the last few weeks.
We have not changed anything at all. In the period it has run, we have been very, very clear that it was properly structured to meet a need which is there in the market today. And I think it is important for people to also appreciate that 30% of these loans are taken between the hour of 3 in the morning and 6 in the morning. And these are principally traders who are basically looking for working capital to meet their day-to-day needs. Yes.
About how much goes into that particular window?
In terms of volume,
value
would be about, on a daily basis, we'd lend about close to 150, 200 billion shillings, and 30% of that, so about 60 million shillings.
And on average, how long does that particular, say, group of traders take to pay back?
It ranges. There are people who will pay within the day, there are people who will pay within the week, and there are people who will take the opportunity to pay within a month. So people use it for different purposes. But I think the important consideration also is the fact that we issue close to 2.25 million discrete loans every month. And these are people who access these loans in less than 1 minute. Yes.
All right. I guess the concern, especially now that you have clarified that 7.5 is a facilitation fee. The loan facility lasts from 1 day to a maximum of 30 days, and every new facility will require the 7.5 facilitation fee. So the concern based on that is if somebody takes a loan each month, for instance, you know, how do you speak to them when they look at how much they've paid in terms of facilitation fee, which others might look at as the cost of that particular loan?
The reality is if you've borrowed for a month, you've borrowed for a month. You haven't borrowed for a year. So the concept of taking a month's facility and multiplying it by 12 doesn't make sense. It's time-based. It recognizes the fact that you might borrow today, you might not have a need tomorrow, and you only come in for this facility when you have a need, and that need is met.
I'm curious from a banker's you know, point of view, and knowing the fact that a very short-term deposit you know, leaves you as a bank in a place where you're not able to you know, constantly say how much you'll have, say, tomorrow as a bank. What informed the decision to keep a facilitation fee at the 30-day mark and not necessarily an interest, which in my opinion would lead to a longer term deposit, which is good for the bank in the long run?
I think let me separate the issue of deposit, because I think that it is also important to recognize that when we designed this product, we designed it to be able to mobilize deposits. So that was really a key driver. And we recognize the fact that people at the bottom of the pyramid did not always have access to banks. And I think if you look at the statistics in terms of banking penetration in Kenya, it's grown over the last 5 to 6 years from around 23–24% to close to 70%. That is as substantially as a consequence of the use of the mobile technology to drive people into the formal financial sector. Savings was a key driver of our activity. And so we raise enough deposits to be able to actually lend. And that's a very, very important distinction insofar as M-Shwari is concerned, because it comprises three principal products. It comprises two savings products, which is the normal savings account and a lock savings account, which would be equivalent to a fixed deposit. And then we are able to use those resources to then lend to the people who are looking for credit.
All right. I just want to use the example of Ghana, for instance, and they've gone through the same thing, especially on the side of deposits. And what they've come up with is a place where, especially depending on how much the bank makes in terms of earnings from deposits, then they say we'll pay out to our mobile money customers either per quarter or half every year. How do you ensure, and of course this calls for a lot of transparency, of course, on the side of banks. How do your mobile money customers benefit from the money you make through deposits?
We are a bank, and so we need to have a very clear distinction between mobile money, which is M-Pesa, which I think plays a very, very critical role in this from a payment perspective, and the bank. M-Shwari is a banking service. It takes deposits, it lends. It meets all the banking related commitments, which includes differentiated pricing based on a product designed for a specific customer segment. Yes.
You talked about regulation, and I'm curious about who really regulates the M-Shwari service.
M-Shwari is a banking service. CBA is a regulated institution, and so we are subjected to regulation by the Central Bank of Kenya.
So if the Central Bank says tomorrow that all mobile money payments must be capped at a certain interest rate, will you as a bank retain that product?
We'd have to evaluate it.
Because?
Because I think, as I said, we designed the product recognizing that it's a short-term loan driven by the fact that it meets a short-term need for any of the customers who want to access the product. That is one. Two, it is not available for more than a month. So if you access the M-Shwari product, you have to pay the loan back within a month. Exceptionally, we give you an option if you are unable to pay, because something might happen and you are unable to honor your commitment within the month. We give you an opportunity to extend it for a further 1 month. That is the maximum period of lending you can access a product.
All right, and as we wind up, keeping in mind that, you know, with the interest rate issue really still high up in the minds of Kenyans, should CBK go ahead, I'm curious, are you as stakeholders engaging with the rest, you know, of your CEO counterparts, for instance, on which direction to head in terms of mobile money payments?
I think that the industry is obviously interested in ensuring that even as we introduce interest rate controls, we recognize the fact that you cannot have a one-size-fits-all solution, because the needs are different. And I think the way to look at it is that a large company like, let's say, breweries, if they were borrowing from the market, cannot be treated in the same way as myself, as an individual, or another individual in the marketplace. And I think that there has to be a recognition that the risk profiles of people will be different, the needs will be different, and each product must be designed to suit the needs of the customers in a particular segment. And I think in the fullness of time, I believe that that conversation will take place, and that the industry and the market will recognize that there is a risk, a real risk, of starving certain segments of credit if we are not careful.
I'm being really rushed to wind up, but I must ask you the regional context, knowing that you are a regional bank and you operate in economies which have mobile payments as well. How do you see this panning out? Do you see a trickle-down effect or some pressure perhaps from customers on that side to force their governments to go the same way?
I think, let me say that we've launched a similar product in Tanzania, and it's running very successfully. We just about 6 weeks ago launched a product in Uganda, and in the first 1 month of running that product, we've acquired close to 650,000 clients, and also running extremely well. I think that rather than focus on whether there is a need to control interest or charges or whatever, I always look at things from the perspective that what is the utility value of what you are looking for. First, do you have access? Because if you don't have access, even if it's being given to you for free, you won't have it.
Absolutely. Thank you so much. What a way to end. The Group Chief Executive Officer, Commercial Bank of Africa, Mr. Isaac Kawondo, thank you so much for making time to be on the Citizen Business Center. Don't go too far in a moment. We'll have Smart Farm.
Thank you.